Hello everyone, I'm Dr. Labib on behalf of Dr. Labib's Academy, which is exclusively for the ACCA papers. And in today's session, we are going to cover F8 Audit and Assurance. Section A question, scenario based on the audit test and the assurance which we have to audit work as such. Okay, now before that, I just wish see this video till the end. At one go you have to see this because it makes sense. You can understand this. And once I kindly request you all to subscribe to this channel, to share this channel among the students who are planning and who are already planned to do ACCA and F8 Audit and Assurance. People think that Audit and Assurance is a difficult paper, but I assure you that after going through all my lectures, you will find it comfortable. You will prepare yourself for the examination very constructively, and hopefully you will do this exam and pass this exam with good marks. It's not difficult. It's only the thing is we have to understand the concepts in a very clear way. I kindly request two things. The first thing is see the video till the end. The second thing is subscribe and share this channel, these videos with the students who says that audit is difficult paper. By the way, audit is not a difficult paper. Thank you. We will start now. What is there? First we will read the scenario as such. Here what they are saying, you are an audit manager. This is most important thing. You have to assume what you are doing. You are an audit manager auditing a financial statements of Newthorpe Engineering Company, a listed company for the year ended 31st. Every other question, that's for the controlled environment. In the controlled environment, knowing the entity. Is it? Knowing the entity. You have to know the entity. That is very important. Is it? You have to know the entity, what you are going to do. What is the actually the activities of the firm? That's very important. Newthorpe management has provided you with the schedule of a realizable values of inventories. They are focusing on what? They are focusing on inventories. A full inventory count was carried out on 30th April 2007. Means they are talking about the inventories that has been counted, full inventory count. Usually, if it is a full inventory count, it will not happen in the external audit. It will happen mostly in the internal audit. Audit tests have confirmed that the inventory counts are accurate and there are no purchases or sales cut-off errors. Fine. That's the really very positive message which we are getting. Very positive message. One of the company factors was closed. That's fine. When you are doing, we are working it on when we are working it on. See that thing. We are working it when we are year ended 30th April 2007. On the same day, one of the factories was closed down. Fine. The plant and equipment of the inventory were to be sold by the time the audit work commenced in 2007. Most of the inventory has been sold. We have ended the current period, accounting period on 30th April 2007. But by the time audit work is commenced in 2000. Most of the inventory which has been there has been sold out. Now they are focusing on the inventory. Be very clear. Automatically our thinking, our imagination, our visualization should be based on the inventory. Is it? We have to stick around inventory. What it says, you are instructed your junior audit to evaluate the valuation of inventory related to the closing factory at the year end. Now inventory is what? Why I have to take IAS 2 in International Accounting Standard. International Accounting Standard 2 says that what? It will be the lower the cost, is it? Lower the cost or net realizable value, NRV. The audit junior has sent you a list of planned procedures. Fine, that's good. Planned procedure. On 17th March, before the end of the year, we are ending it on one? Yeah, before the end of the year. This is the thing. This is the first part, okay? This is the first part which it is going to be there, okay? This is the first part. This is the first part with respect to what? With respect to the inventory. Fine. The second part, what it says. There are two scenarios, is it? Till now it is, this is the first scenario. You put it as, this is scenario 1. And okay, on 17th March, Newthorpe managing director was dismissed for some misconduct because he have done something wrong. It was decided that the managing director's salary should stop from that date. He did something very extremely wrong, and that no redundancy or compensation payment should be made. Straight away they are sacking the managing director. Straight away, without any notice, nothing. What happened? The managing director has claimed, he has put his own appeal. It is an unfair dismissal, and he is taking a legal action against the company to obtain compensation for loss of his employment. He has the right, understand what? He has the right to appeal. He has the right to take legal action. It's up to him. The managing director says that he has a service contract with the company which would entitle him to 2 years' salary at the date of dismissal. The director believed that 35% chance of managing director succeeding the claim. How much is the chance? It is only a 35% probability, is right? The directors believe that the managing director is having only 35% probability that he will succeed. The financial statements, is it? The financial statements for the year ended 30th April record the resignation of the director. However, it did not mention his dismissal, and no provision for any damages has been included. Maybe there may be some clause, is it right? There may be some clause which way they are saying that they are immediately sacking the managing director. Fine. Maybe without any reason, is it? Without that much strong evidence, the management will not take such a extreme decision. Means there are two things are there. One thing is with respect to the inventory. Second thing is with respect to the managing directors. Okay, this is the one. Now, based on this scenario, they have given you some questions. Fine. Which two of the following are true regarding the auditor's attendance? Whenever there is count will be there, the inventory count or fixed assets, any cash count. Is there any which of the following statements are true regarding the auditor's evidence with respect to inventory count? Now, which one is very much essential? It is the auditor's responsibility. No, it is not auditor's responsibility. It is whose responsibility? It is the management responsibility. The auditor is not responsible to organize the inventory count. It is management who has to take the responsibility to organize the inventory count. Fine, this is not the answer. The auditor observes client staff. That's what the auditor will do. Auditor, what they will do? They will do only an observation. Is it right? He will do only the observation to determine whether inventory count procedures are being followed. He will only observe whether the procedures which has been laid down has been followed or not. Only observation. Fine. This is the right one. The auditor review procedures for identifying damage, obsolete and slow moving inventory. What the auditor will do? Auditor will observe. Auditor will review. Fine. Auditor, what they will do? This is the things which are very much relevant. The auditor will observe, the auditor will review the procedures. Here also auditor will observe the procedures. Here also the auditor will review the procedures. Fine. Now, again, if even if the answer is right, you have to go to the last one. If the results of the auditor test counts are not satisfactory, the auditor should insist. Auditor cannot insist. Auditor can only request. Yeah? Auditor cannot insist. The auditor can request only. Is it? And most importantly, what happens if this is not if the auditor has made the request and the request is not considered, then the auditor can write in his comments. Okay, in his report he can write whatever appropriate he thinks. But auditors cannot insist. Auditor can only, what they can do, they can only request. This is the way we have to do, isn't it? Whenever we are analyzing the options, we have to analyze all the options. By this, what will happen? We will have a complete view. It is not the auditor's responsibility, it is management responsibility. Auditor will observe, auditor will review, and auditor cannot insist. He can only request. Second one, what it says: which of the audit procedures below is not appropriate? Sorry, not appropriate in auditing the valuation. We are talking in terms of what? Assertion. Assertions of what? Assertions of inventory. What is the assertions? When you say it's not appropriate, means if we are saying that it is not appropriate, fine. Out of four, 3 are appropriate and 1 is not appropriate. Is it right? 3 are appropriate. Automatically you will learn all the things. You just refer my videos which has been posted related to this. You will get a complete understanding about what I have explained you. When you are doing this, is it? What is the not appropriate? Is it? Means which is not relevant. Agree we have to agree. Agree the selling prices of inventory sold since the year end and to the sales invoices. Definitely you have to agree. It is one of the valuation assertion of inventory. You are agreeing the selling prices of inventory which has been sold and with the sales invoices. Is it right? It is an assertion of valuation. Okay? It is an assertion. Put one tick mark. We are talking about, we are taking into consideration what which is not an appropriate assertion. Assess the reasonableness. These are the key words, is it right? Assess the reasonableness of management point estimates of realizable. See, it's maybe if we have done financial accounting, the financial report arm's length transaction, which is what we are saying. We never say it is. This is the jargon which you use in the accounting, arm's length transaction. What the auditor will make a point estimate. It's an individual. Auditor will do his own estimates. That is the reasonableness of management, what management has made the estimates, specific estimates of realizable value of inventory which has not been sold. What they are doing? By reviewing the sales before the year end. We will see that what is the point estimates by reviewing if they based on the last sales prices, definitely they will made an estimate of what it will be happen. Comparing the values with inventory which has been sold since the year end and considering which has not been finalized. Means what we are doing, we are talking in terms of if you take into consideration they are based on the actuals, they are making a point estimates. This is also a concept of what? A concept of valuation in terms of assertion. For a sample of inventory sold just before and just after the year end, you are matching the dates. See, we are talking about what? We are talking in terms of valuation. When we are discussing in terms of valuation, the concept of materiality will come into picture. Here, the concept of materiality. Here we are talking, what they are saying, here they are talking in terms of what? They are talking in terms of dates. In terms of dates. Sales invoices, date posted to the ledgers with the date or related goods dispatch notes. Here they are talking about the sequence. Is it right? They are talking about the sequence, whether it has been in sequence or not. We are not talking about the sequence. We are talking about the valuation. When you are talking about the valuation, just put one point here. Don't come to a conclusion straight away that this is wrong. We have to see what is the next one. For unsold inventory which has been not sold, assess reasonableness of provisions for selling expenses. See, it means see what happens. Your unsold inventory is there. Definitely unsold inventory, there will be some provisions for selling expenses will be there. By comparing the selling expenses with inventory, so means unsold inventory expense, selling expenses. We are comparing with how we are matching. We are matching with the selling expenses of inventory sold. Definitely, there will not be a much difference will be there. Is that? If it is the estimate should be same, okay, with respect to unsold inventory and the inventory which has been sold. This is also an assertion, and which is not an assertion. This is not an assertion. The answer is C. Okay. Now Are you clear about this? I'm very slow here. Okay, I'm very slow. Use the top. See, what we are when we are discussing one question, one scenario based question, the concepts has to be very clear. Again, we should not, with the moment you go to another question, another scenario, if you are coming across this type of concepts, you have to go to the straight. Using the drop down list, complete the sentence below to show the current accounting treatment. So what is the legal claim by the managing director for unfair dismissal and the reason for his the legal claim. See, this is for the first list, this is for the second list. First list, there are two things are there. Second list, there are two things is there. Yeah? The legal claim be recorded. See, it is only an estimate, is right? It is only the what they say. They say that it is going to be, probability will be how much? It is only a 35% chance. Is that? The 35% means we cannot record. They may be successful, they may not be successful. What is the legal claim should be recorded as a provision or not be recorded as a provision but disclose it as a contingent liability. That what we should not see is when we have to when we will record, when the event has been happened, when everything is settled down, we are sure that it has going to be done, or at least 50%, 60% chances are there that it will go against the decision. Then only we say there is no basis on that. If that is not the case, what we have to do? It should not be recorded. But as a provision, is it? It is not be recorded as a provision. I will put the things like this. Is it? It should be not be recorded as a provision as such. It should not be recorded as a provision, but disclosed as a contingent liability. Now, because what is the reason? We have to tell why it is not there. A present obligation exists, but the outflow of economic resources is not probable. A present obligation exists depending whether or not some uncertain future event will occur. Yeah? How it is going to make sure about that. Yeah? But it says that a obligation is there, is it? A obligation is there. We don't know how the things will work it out, whether in terms. We say it is 35%. The management director says it is only 35%. But we don't know how it will work it out. There is an obligation, fine. But the outflow of economic resources is not probable. It is only how much? It is only 35%. Is right? It is only 35%. Means what we have to write? A present obligation. Is right? A present obligation exists, but the outflow of economic resources. I'm writing because you should be in a position that you should understand is not probable. A present obligation is existing. This is where we should understand. And if you have any doubts with respect to any specific session, please write it in the comment box. Definitely I will look into that. Now, which of the following audit procedures? See, audit procedures are very important. audit procedures, they will ask you in scenario based questions. They will also ask you in the section B, which of the following audit procedure likely to provide the auditor the most reliable evidence regarding the legal claim. Whenever you are talking about the reliable evidence, see, internal evidence is weak. Is it? External evidence is strong. Is it? External evidence is strong. Is strong. Now, the next one. Is it? The next one. What is a oral? Oral evidence is weak. Oral is it? Written evidence is strong. This is what it says. Now, you have to review the meetings of the disciplinary hearing to understand whether review the minutes. Only we are reviewing, is that the minutes of disciplinary hearing to understand whether the company has acted in accordance with economic. This is the evidence from where they are getting. This is the evidence they are getting from internal sources. It is weak. Okay. Review correspondence between company and its lawyers regarding the outcome of the case. We are just reviewing, is right? We are just reviewing the correspondence. We are not taking the advice, is right? Request a written representation. I have written somewhere, is it right? I have written in the beginning. If it is written, evidence, it will be very, very strong. Yeah, it will be very, very strong. Request a written representation from management supporting their assertion. From management is, see, it is written, but it is internal. Is it? It is internal. Again, it is going to be a weak. Send an inquiry letter to the lawyers to obtain their view as probability of the claim being successful. This is what? This is external. Definitely when you are sending an inquiry letter, it will be external and the reply will be in return. Is it? This is going to be strong and most reliable. Is it? It is strong and most reliable. Fine. Now, are you clear about this? I am taking my own time. Okay, I am very slow. I am just making sure that things will work in that. The dismissal of Newthorpe managing director has alerted you to the possibility that the company may not complied with the employment regulations. The dismissal of directors alerted you. Maybe as an auditor, we thought that maybe you will get in doubt that how a person with that stature, with that designation will be thrown out straight away. Then as an auditor, you will put some question marks. You therefore need to determine the impact of such non-compliance may have on the audit. Yeah? We should also know what are the HR policies. What are HR policies and what is the day of when you are going to dismiss, when you are going to when somebody is resigning. Definitely, are they compiling with the rules and regulations? Very important. ISA 250. Is it? ISA 250. What it says? ISA 250 says that revised one, consideration of laws and regulations in an audit of financial statements, says that what is the responsibility of auditor in relation to the compliance. What is the responsibility of the auditor in relating to the compliance? Which of the following responsibility is correct regarding the responsibilities of auditors in relation what the auditor has to do in these circumstances? That's very important. Okay, what the auditor has to do, to what the auditor has to do to obtain sufficient appropriate evidence. This is the word. Is that this is the all? See, when you are see, the most important thing in this paper is you should have the terminology, the language has to be the audit language. The moment you understand, the moment you can express that in the audit language, automatically things will be easy for us. To obtain sufficient appropriate regarding the complaints as they have direct effect on. We are just obtaining. We are not doing anything else. Is it? We are just obtaining sufficient appropriate as they have direct effect on the financial state. We should not obtain. We should, what they say, what is the responsibility? To perform specific audit procedures to identify which audit procedures you have possible non-compliances, which will have the non-compliances, which we will see whether any other option is more related to this or not. To perform a specific audit procedures. Specific audit procedures in terms of what? In terms of HR, in terms of dismissal, is it right? In terms of dismissals, we are very specific. The auditors do not have any responsibility. The employment regulations do not have a direct effect on the fund. No, we cannot say that the auditors do not have any responsibility. To prevent and detect all non-compliances with the, we are not talking about all. We are talking only about specific. Here also what they are just what they are doing, they are just obtaining, okay, sufficient appropriate evidence. They are not doing anything else, is it? They are not doing anything else. Here also in this case it will not work. What is the right answer? The right answer is to perform specific audit procedure to identify possible non-compliances. See what we have learned from this session, that's very important. At the end of the session, we should know what we have done. See, most importantly, first you should identify how we have to approach the question as such. They have given you two different scenarios, one with respect to the inventory and another with respect to the managing director dismissal. And based on that, they have asked what is the, with respect to inventory, what is the role of the auditor? What is the role of the auditor? And the second one, in terms of inventory, how the valuation should be done? Or valuation assertion should be done with respect to what is the procedure to be followed in terms of inventory valuation with reference to assertions. Next, what the third one is, we are talking about how the legal claim of the managing director is valid or invalid, how it has to be reflected. Fine. What is the accounting treatment we have to give? Fourth one, we are talking in terms of what? In terms of what is the audit evidence with respect to the managing director's dismissal. And the last one is how they have to measure, they have to verify the regulations, whether the decision has been taken as per the regulations, because it is a spontaneous, instant dismissal of a very senior management person, and if it has been done, definitely the directors have taken the decision, will within the framework, within the regulations of the company as such. They will not take the decision so harsh, so fast. Whether it is the auditor's responsibility that whether these decisions have been laid down in the rules or not. Yeah? These are the five scenario based question with respect to section 8. Hopefully you got some idea about this, and it makes the difference. Okay. Thank you so much. Just have any comments are there, please mention it in the comments box with whatever the comments, so that if I want to improve it to the best of the ability. And I kindly request you once again, share this video with the people who think that audit paper is difficult. In reality, it is not. And share the video and subscribe to this channel. Thank you so much.